USD sucks. And here's why. Okay, harsh words, I know. So let me explain myself. Why does USD suck? And for those who not in the know, USD, the US dollar. And don't get me wrong, all right? I love this place that I live. I think it's fantastic and it's wonderful and it's super awesome. Beats a lot of alternatives. But hear me out. USD specifically sucks. And the reason for that is because of its ever increasing inflation, the ability to print out just endless stacks of money, which again depreciates our dollar even more and even more. For those in stock, imagine this. Imagine you own stock in XYZ, HLMO, whatever company, right? It doesn't matter. But you own stock that's worth $50, and all of a sudden they have a stock offering, which is giving out stock to new people who then now own half the company. Your $50 a share is now worth $25 a share. Now, is that fair? No. Similarly, we keep printing out money, creating more piles of money, which again depreciates a dollar even more. So now $25 is worth $12.50, whatever. It's just like, it's crazy. Just over the lockdown, you know, the whole lockdown. I think I could be wrong. Correct me if I'm wrong in the comment section, please. But I think we basically the Fed ended up printing out double the money we already had in circulation. So basically, like all our, yeah, they like let's say we had I don't know, we had one pile of money. Now we have two piles of money, and that sounds great in theory. Certainly more people can get access to the money, but the fact is that the money is now worth basically half of what it should be, and that's why we're seeing some runaway inflation right now, along with a whole number of other things. Again, you know, you want to buy some meat, you want to buy some toilet paper, you want to buy some gasoline, you want to buy some milk. That is all going crazy right now. You know, the prices are basically doubling, and not quite doubling, but you know, basically doubling. And that's not even counting housing because of the lumber shortage, you know, that we're having right now. We're having so many shortages, which are artificially inflating the price of a number of goods. And our U.S. dollar is you know, we're just losing it to inflation. So basically, if you're holding all your cash in a bank account, right, and you've been holding it for 5 years, 10 years, you know, it is worth significantly less. It has significantly less buying power than it should. Is that fair? No. And how did it end up happening like this? How did the Fed get the ability to print out as much money as they want? Well, basically it comes down to Nixon's decision to unilaterally take us off the gold standard in 1971. For those not in the know, back in the day, each dollar was a promise. It was a promissory note for the equivalent value in gold. They were equal. $1 of gold, $1 bill, they were equal, and your money basically stayed the same. There was very little inflation because it was always backed by gold. You could actually take your dollars and you could trade them in for the equivalent value of gold, which keeps its value for a number of reasons. Because it's malleable, you can break it into pieces, you can make coins out of it, it conducts electricity, it doesn't rust, we don't lose it to time, and you can't really make any more of it. Now you can always mine more, but you can't make more, which keeps it pretty stable. And that is what we were on before. Now we went off the gold standard in 1971 thanks to Dick Nixon, for whatever reasons he had to take us off the gold standard. So now our money is constantly being printed and we are losing it to inflation. Okay, how do we combat that? I will tell you right now. But first, I'm going to ask you to click like, subscribe, and hit that notification bell so that you get the new videos as soon as they come out. Guys, it's really helping me build my YouTube channel. It is helping me defeat that evil YouTube algorithm. So let's go. Let's do this. Thank you so much for your help. All the best. This is what we are going to do. We are going to hedge against inflation. Hedge against inflation. And here is how we are going to do it. So, you have, let's say for the sake of it, $100,000 in the bank, right? And again, you're losing that to inflation every single year. Sure, they're giving you a 0.000001% a year. Do you think that's meeting inflation? No, you're losing a lot of buying power each year. So here's what we are going to do. And I'm not talking about investing specifically, although if you invest in a number of companies, and if you're a little more cautious of an investor, get some index funds, invest in the S&P 500. On average over the past like 100 years or something like that, every 10 years your money doubles by investing in the stock market, by having a well-rounded portfolio. So if you put in 100,000 this year, in 10 years, this is no guarantee, but on average it'll give you $200,000. So that is nothing to sneeze at. Now, again, you always want to keep some cash on hand. You want to keep a few months cash on hand, just in case of emergencies, just in case you lose your job, just in case of any number of things, because you want that liquidity there. You want to be able to trade it immediately. You don't want to have to sell off stocks and maybe you sell them at a loss. So keep some cash always on hand, a few months worth of cash on hand. Very good. About 6 months is a good amount in my mind. So, not talking about investing though, how do we fight inflation? We fight it by buying commodities. I guess you could call this investment, although it's not really a stock market. It's not really a number of things, but we are buying commodities. We are buying things with a built-in value. And I'm not talking about buying cars that lose 50% as soon as you drive them off the lot. Oh no, that is not what I'm talking about today. What I am talking about is buying gold, buying silver. And in a minute, I'm also going to talk about buying crypto and buying ETFs. But first, let's talk about buying gold and buying silver. So, if you're investing in gold and silver, right, and you're holding on to it for, again, it fluctuates, it goes up and down, but you want to hold on to it for several years because this is your hedge against inflation. And whether you hold an ETF, which is basically a stock certificate, which is good for the value of gold, just like the US dollar used to back in pre-70s. But you can also buy physical products. And to buy physical products, I would recommend checking out a few of these other videos on YouTube, how to buy gold, how to buy silver, and why. Right now I'm going to talk about the ETFs. There's a silver one I think called SIVR, and there's a gold one. You can check it out on Webull or whatever at is it GLD? I think it's GLD. So check out SIVR and check out GLD, and those will take you to ETFs where you're basically investing dollar for dollar in gold and silver. It's always backed by gold and silver. So if you hold it in there for a number of years, you are hedging against inflation because you are actually holding on to gold, which retains its value. You're actually holding on to silver, which retains its value, as opposed to the US dollar, which constantly is going down. So, again, I also believe in holding a little bit of gold, a little bit of silver. Not sponsored by it, but I recommend JM Bullion. Check out their website online. You can buy gold and silver for basically spot. For those not in the know, spot is basically the price at any given time for the product. You're always going to pay a little bit of a premium, but that's why you hold on to it. You hold on to it so that it goes up in US dollar, and you have a lot more money in 5, 10, 15, 20 years. Now, if you're going to buy gold and silver physical, which I don't recommend, I recommend buying the ETFs, but yeah, I hold a little bit in gold and physical silver. Then I would recommend gold and silver eagles. They're again backed by the U.S. government, and they are made of actual physical gold and silver. They retain their value very well, so check out gold and silver eagles. Separate from that, let's talk about the future of investing, and we're going to talk about the future of investing with cryptocurrency and ETFs. Now, this is the thing right here, guys. Now, all warning. First of all, I'm not a financial investor. This is not financial, or sorry, I am not a financial advisor. This is not financial advice. Education and entertainment purposes only. But I'm going to tell you what's up with cryptocurrency and with ETFs. Now, cryptocurrency is very interesting. A lot of people say, I want something that's physical, but at the end of the day, all dollars nowadays are just ones and zeros on computers. You know, you can hold your dollar, think it means something, but at the end of the day, it just means a bunch of ones and zeros on computers that your banks keep switching back and forth with each other. So that's not that much different than cryptocurrency. The difference is that a lot of the major cryptocurrencies, I'm talking mainly Bitcoin here, but there are other ones, they have scarcity. They have scarcity because there is a fixed number in the world that can ever be produced. There is a fixed number in the world that can ever be produced. That means that there is scarcity, which is pushing the value up, and people are holding these like gold, like silver, and waiting for the value to go up against the US dollar, so that you retain, if not increase, your buying power in 2 years, 5 years, 10 years. And I think that's where this is all going, especially with this whole metaverse thing we're getting into right now. Things are getting crazy. Let's talk about the metaverse. You know, you're going to want digital property living in your digital world. And again, this all sounds like sci-fi, but this is all stuff that's happening right now. So these digital properties, including JPEGs and GIFs and whatever, and they are being basically backed by the blockchain. They are being staked as your property, and they are being verified by the blockchain, so that everyone knows that these things are your property. That gives you entitlement to it. That gives you they stake the claim to that digital property. It will always be yours until you decide to trade it to someone else. And these things are again holding their value in the current market. They are holding their value, and they're increasing their value. I'm talking what's it called? I'm talking again cryptocurrency, and I'm talking NFTs. NFTs, that's what we're talking about today. If I'm talking about the digital property and I said ETF earlier, I meant NFT. So that's what we're talking about right now, the NFTs. Look it up. Look at my other video, what the hell is an NFT? That's a awesome video for beginners. So again, let's talk about the downside. Downside, I'm going to tell you the truth. I'm going to keep it real with you guys. So the downside is let's talk about a really speculative one. Let's say there's a big solar flare, wipes out the internet. Guess what? All your digital stuff gone, and all your wealth is gone. Do I think that's likely? I don't think that's necessarily likely in our lifetime. I think there are contingencies upon contingencies, but it could happen. Separate from that, people could just lose interest in these markets. You know, maybe a new technology comes out which makes these less valuable, significantly less valuable. Maybe it even these can go to zero. You know, maybe your Bitcoin's going to be absolutely worthless in the future if a new technology emerges. That is a risk. That is a risk, and we are here to try to mitigate risk. So always remember that. Don't invest where you can't afford to lose. But all we're ever doing is trying to hedge against the unknown. We are trying to hedge against the unknown. So in my opinion, with my money for myself, I'm putting it a little bit. I'm allocating some to not just more speculative investments, but I'm also putting it in the gold ETFs, silver ETFs. I'm buying a little gold, a little silver, physical. And separate from that, yeah, I'm investing in digital currencies, in cryptocurrencies, in NFTs, because that is That is what it's about right now. That is what the future is happening. You know, you may think you're late to the party, but at the end of the day, we're at the very beginning of something new and something big. So I'm not going to tell you to get in it. I almost did, but no, I'm not going to tell you to get in it. But I will tell you to seek some real advice from professionals and see what they think, because this is a big deal, serious deal. And if you get in the ground floor, you could be making a lot of money. You could be losing it all, but you could be making a lot of money. So it's something to consider. Seek advice from financial professionals. So guys, that was my little spiel on why USD sucks right now, and why we are putting it into commodities like gold, like silver, like copper even. And we're talking about NFTs, and we are talking about cryptocurrencies. So thank you very much for being with me here today. I do hope that you click like, subscribe, and hit that notification bell, as it's helping me defeat that evil YouTube algorithm. There we go. Let's all have a great day. Let's all build our portfolios together. Take care, one and all, friends and family. Peace.